Hi, this is LW Global Finance. Welcome to today's deep dive into the global markets, where we break down the stories that move the economy, Wall Street, crypto, and more.
I'm sure you've seen the headlines, right? Crypto markets crashing, new trade disputes over these obscure minerals, stock markets going absolutely haywire, and you probably thought, okay, just another crazy news day. But what if I told you they're not separate stories at all? They're actually symptoms, cracks, appearing in the very foundation of the global economy. So today, we're going to connect those dots and show you what's really going on. And, well, it's a pretty alarming picture.
And hey, don't just take my word for it. This isn't some wild theory. The Financial Stability Board, we're talking a major global financial watchdog here. They put out this really stark warning: cascading failures. It's basically a fancy way of saying a domino effect. One thing goes wrong, and it could set off a chain reaction that brings the whole system tumbling down. The stakes? Yeah, they could not be higher.
So this really brings us to the core question we're tackling today. You know, for decades, the world is basically played by the same economic rulebook, one that's all about cooperation, efficiency, you know the drill. But what happens when someone just tears that rulebook up? What comes next? What fills that void? Well, let's dive in and find out.
First up, the alarm bells. And believe me, they are ringing loud and clear. This isn't some far-off theoretical problem. We're talking about leaders around the globe scrambling because they're facing these totally new, unpredictable risks that, well, they just don't fit the old models anymore.
I mean, just look at this. You've got the G7, the biggest industrial nations, holding emergency talks. You've got that same Financial Stability Board issuing high-priority warnings. Finance ministers are flying into Washington for urgent meetings. This is a full-on scramble. They're trying to put out fires that are popping up literally everywhere at once, from the weird digital world of crypto to the very real physical world of supply chains. Okay, so let's talk about the first one of these big cracks in the system. And this one, it's in the digital world. I'm talking about the Wild West of crypto. It's invisible, it's everywhere, and it has become an absolutely massive financial beast.
So the huge problem with trying to control crypto comes down to this one fancy term: regulatory arbitrage. But all it really means is rule shopping. Think about it. Crypto is global, right? But financial rules are made country by country. So a crypto company can just look around the world, find the place with the loosest, weakest rules, and set up shop there. It's a huge loophole, and it creates massive risks for the rest of us.
Now, you might be thinking, okay, so what? Why does this rule shopping actually matter? Well, because of this number right here, $4 trillion. That's what the global crypto market is worth now. And get this, it doubled in just the last year. When you have something that big, that powerful, operating with basically no consistent rules, well, that is a recipe for disaster.
So the Financial Stability Board, they actually dug into this. They looked at almost 40 countries, and what they found was a mess. Significant gaps and inconsistencies in the rules. You've got firms doing that form shopping we just talked about, hunting for weak spots. Countries aren't talking to each other, cooperation is fragmented. But here's the really scary part. The walls between crypto and regular banking are starting to crumble. And that creates a bridge for any crypto chaos to spill right into our traditional financial system. And listen to this from John Schindler. He's the Secretary General of the FSB. He basically said different rules could lead to dynamics which could exacerbate shocks. In plain English, he's saying everything we were afraid might happen is happening now. A blow-up in some unregulated corner of crypto isn't just a crypto problem anymore. It can now cause a full-blown global financial crisis because the safety nets just aren't there. Okay, so while all this digital chaos is brewing, a completely different kind of crack is forming. And this one is the total opposite of crypto. It's not about digital code, it's about actual physical rocks. The tangible stuff, the raw materials that our entire modern world is literally built on. And here it is, the second fault line. China has decided to expand its export controls on critical rare earth minerals. Now, this isn't just some boring trade tariff. No, this is a major strategic power play. China dominates the supply of these minerals, and by tightening its grip, it's basically turning the building blocks of all modern tech into a powerful geopolitical weapon. And if you're wondering why that matters, just look at what's at risk. We're talking about the guts of our most advanced defense systems, guided missiles, radar. We're talking about the semiconductors that power, well, everything. The motors and electric cars, the turbines and wind farms, all of it depends on these minerals.
All of a sudden, national security, our tech industry, even our green energy goals, they're all incredibly vulnerable. And things went from bad to worse fast. Check out this timeline. Early October, China makes its announcement. Just a few days later, boom, the US stock market gets hammered. And by the middle of the month, guess who's holding another emergency meeting? Yep, those same G7 finance ministers. It just goes to show you how a physical choke point like this can send a shockwave through the global economy, like instantly.
So you've got these two huge cracks, one digital, one physical, both threatening to bring the house down. So what are the world powers doing about it? Well, they're trying to mount a coordinated defense, basically scrambling to patch these holes before the whole thing collapses.
When it comes to the mineral crisis, the G7's response is, well, it's multi-layered. They know there's no single silver bullet here, so they're hitting it from all sides. On the diplomatic track, they're talking directly with China. On the economic track, they're racing to build up new supply chains with friendly countries, and at the same time, they're working on the technical side to get their standards in sync and coordinating their strategic stockpiles. It's a full-court press. And these aren't just vague promises. These are concrete steps. They're fast-tracking new mining projects in friendly countries. They're pouring money into building new processing plants so they're not dependent on China. They're building up their own government stockpiles, kind of like an insurance policy, and they're even getting smarter about recycling to get these materials back. It all boils down to one word: resilience.
And what's really interesting is that you see the exact same thinking being applied to that crypto problem. The FSB's recommendations? Close the regulatory loopholes, get better data so you can actually see the risks, and get countries to work together before a crisis hits. See the pattern? Whether it's digital or physical, the answer is the same: coordinate, coordinate, coordinate.
Okay, so let's step back for a second. What does all of this actually mean? When you look at the digital crisis and the physical crisis side by side, and you see how the world is trying to react, a really clear picture starts to form. We are watching a brand new economic playbook being written in real time. Yeah, let's be super clear about this. This isn't just another dip in the market. What we're seeing is the dawn of a whole new era. For decades, it was all about efficiency, globalization, making things as cheap as possible. That's over. Now, the game is about security, predictability, and straight-up competition.
And you can literally see the fear in the markets. What do investors do when they're scared? They buy gold. And right now, they are buying a lot of gold. It's hit a record high. That's a giant flashing sign that says investors are running for cover from all this uncertainty.
And it's not just gold. Look at silver, up a massive 80% just this year. This isn't just random market chatter, folks. This is what a flight to safety looks like. It's the big money telling us they are bracing for a serious impact. And here's where it gets real on the world stage. The Russian ruble takes a nosedive. Why? Because of fears that the US might use its economic muscle to squeeze Russia's oil money. This is the new reality, right here. Your economy is now a weapon in the geopolitical arena.
This really sums up the whole shift perfectly. The old playbook, it was simple. Make it cheap, make it efficient, and make it anywhere in the world. Globalization at its peak. The new playbook, totally different. It's about security. It's about regional supply chains. It's about doing business with your allies even if it's more expensive. The fundamental priority has been turned on its head.
And so all of this leaves us with one huge final question. For a long, long time, we all pretty much knew what the rules of the global economy were. But now, in this new world of digital Wild Wests and physical choke points, the real fight, the biggest competition of all, is over who gets to write the next chapter of the rulebook. And right now, the answer to that is anyone's guess.
Thanks for tuning in to LW Global Finance. What's your take on today's market moves? Leave a comment, share your thoughts, and don't forget to follow us for more updates and analysis.